Your risks are rising as someone who's long this stock professionally, because the last thing I want to do if this thing completely blows up is to have to face people and say, well, wait a minute. Look in the summer of 2018, look what this guy was doing. Why were you still in this? Clearly there were issues. And I don't think you get to tell people, oh, we're going to make 20,000 Model 3s a week when you know that's not going to be the case. You don't get to tell the city of Chicago, I'm going to build a tunnel, and do it in a couple of years for $1 billion through 20 miles of residential area. You know that that's probably not going to happen.
What Tesla is doing is they are creating an industry just like Amazon has created the industry. It is vehicle production, it is battery production, it is software, it is autonomous driving, it is supercharging. Whatever Tesla is doing today has never been created before. All the naysayers were expert in their previous version of the industry, and they are completely clueless in the new industry that is being created as we speak.
Tesla said in the first half of last year they were going to grow Model S and X sales by 66%. The number was only 7%. Why? Because Chevy Volt came in and took a bunch of share. This year we have the Jaguar E-Pace, we have the Audi e-tron, we have the Hyundai Kona, and we have the Nissan Leaf. All cars 100% BEV with over 200 miles of range. They have real competition for the first time. They're not creating a new industry. The auto industry has been around forever, and they have real competition for people who know how to produce coming in.
We think they will be profitable on a non-GAAP basis later this year. We think we'll be testing 385 and on the way to the all-time high of 389 within the next 2 quarters. Many smart investors that have a much longer-term view on this than the next 6 months love the fact that Elon is an innovator and continues to invest in that innovation. And so to the degree that he can sort of put a stake in the ground and say, look, we're achieving profitability in a mass market vehicle. We've got significantly more demand than any other auto manufacturer has ever unearthed, in terms of reservations for a vehicle. I think they'd be more than willing to support him in his endeavors.
I think there are a variety of reasons why we're negative on Tesla. The first is we're forecasting lower sales of Model S and Model X. So the refund rates actually are increasing, the cancellations are increasing. What are some of the reasons? One, extended wait time for these models. Second, the expiration of the $7,500 credit. Third, a lot of people who've made the reservations were under the anticipation that they were going to get a $35,000 base model. That model is not coming out to 2019.
The market is right now implying about a 9% move up or down after earnings. That's approximately in line with how much Tesla typically moves after earnings. But interestingly, the areas where we saw the most opening activity today were on the 330 strike calls. I was looking at the August weeklies. Over 3,000 of those traded for about $1.56. So those are traders betting that Tesla could be as much as 10% higher by the end of the week. Full disclosure, I've made bearish bets on Tesla myself.
We're forecasting about a 50% increase in revenue sequentially. We think they're going to show continued progress on Model 3 production, and we think they're going to guide to a profit. For the last 4 quarters, the focus has been exclusively on production, and I think that's about to change. If you look at July results, the Model 3 was the best-selling small and mid-size luxury sedan, and we're just getting started.
This company is going through a very important transition. It's going to its first, close to mass market price vehicle. This is supposed to be the volume vehicle. They've had significant production ramp issues, and they want to see a CEO who's more level-headed, and I think that's what he needs to kind of portray today.